I'm Liz Naumovski, host of Finance is Personal. How great do Canadians feel about money? Not so great, apparently. It seems that the amount of debt that we're accumulating has put us in a position that we can't meet our financial obligations. Now, is this because we don't understand that we can't afford our debt repayments with rising interest rates? Or are we still focused on keeping up with the Joneses? Or is it both? And what about women in finance? We're dealing with the pay gap. Some are out of the workforce to raise children, and some just don't understand finance at all. Joining me now to talk about money, smart living is Kelley Keehn, financial literacy advocate, award-winning author, and personal finance educator. Kelley, I have waited so long.
I know, I'm so happy to be here with you.
For the stars to align, our calendars to align. I'm thrilled that you're here. Thank you.
Thank you for having me. I'm so happy to be here, Liz.
That's awesome.
Finally.
So, your mission is for Canadians to feel good about money.
Yeah.
How good are they feeling right now?
They're not feeling very good about money. So many stats have come out recently. It's a new year. People are feeling a bit blue in January, getting over that holiday hangover. So MNP came out revealing again that in their survey, this is not all Canadians, but in their survey that 50% are $200 away from insolvency. The Financial Planning Standards Council and Credit Canada, two nonprofit organizations in Canada, they also wanted to know how Canadians were feeling, and their survey revealed that 2/3 of Canadians are, money's keeping them up at night again. 1 in 4 feel that the economy is actually going to get worse. And I mean, I could go on and on. Like for every dollar that we bring in of disposable income, every dollar we owe $1.78.
Yes.
And that number keeps creeping up. So with the FPSC Credit Canada survey, it was kind of like a kitchen table survey. What's worrying Canadians? And it was rising costs of, just daily necessities. And were they going to have to actually go into further debt to pay for that? Debt itself, and then are interest rates going to keep going up? So right now, the Federal Reserve, the Bank of Canada are feeling a bit dovish, but as soon as they see economic factors change, it's still their mandate to increase interest rates in 2019. So that should be a big wake-up call for a lot of Canadians to look and dig into their finances.
Well, that's just it. I mean, our debt is growing every day.
Yeah.
And you'd think that somebody would sit there and look at how much debt they have and how much money they have coming in and think, okay, I really need to take a handle on this. I really need to get a handle and figure out where can I pay things down? What can I do? If I have extra money, do I invest? Do I put it into an emergency fund? Do I pay down my debt? Why are we not doing this?
Well, number one, and that's a great question, right, is that really people are feeling so stressed. There's a number of reasons. They're feeling really stressed. They're feeling overwhelmed. So then what happens is apathy kicks in. They don't know where to start. It just seems insurmountable. It's overwhelming. And Liz, especially for the people that know they don't have enough money, okay? So for those people, they are telling me that they're not even opening their bills oftentimes. They're maybe making their minimum payment, if that. And there's a level of shame and embarrassment that comes with that. You don't have that self-esteem, that financial self-esteem to call up your bank and say, and by the way, yes, you can, as you know.
Right.
But to ask for a better rate or what have you.
But how do you get to that space where you get your bills and you're terrified of them, you put them in a drawer and hope that they go away, which they won't. Your debt keeps growing. How do you get to a point at home where you say, okay, I really have to deal with this and I really have to open them up and see how bad it is so that I can make it better?
Yeah, well, it shows like this, right? It shows like this that give a ray of hope. There's a real issue with what's called self-efficacy, and what that basically means is if I do something, is that actually going to make a difference? It's like eating the whole pie, right? It's like, oh, forget it, whatever. And some people have eaten the whole financial pie, so they're like, whatever. Why do the dishes when you've eaten the whole pie?
Right.
So. The message is, there's a couple of messages in that. The Financial Consumer Agency of Canada, Credit Canada, a number of organizations have some fantastic online tools. If you got online, so for example, the average Canadian has $4,000 in credit card debt. If that were sitting at 29% interest, that's going to take a long time to pay off.
Yes.
You're going to double what you're paying in interest, okay? If you got on that calculator and saw that just $5 a day more than paying your minimum payment, you would have it paid off in 2 years and a couple of months. you would save thousands of dollars in interest.
Yes.
Now you go, that's kind of exciting. We can do that. I'm not saying latte factor, sacrifice, don't have fun. But if you crunch the numbers, and you don't have to be good at math because everything's online for you, but when you see that, it gets kind of exciting.
It is.
You get the family involved. You're like, look, we can get out of this. And maybe there are some short-term sacrifices. Maybe you don't take the vacation this year. Maybe you eat at home a little bit more. But when you know that there is hope at the end, it gets everyone involved. Now, the caveat to that is some people are so beaten down financially that they can't do that. So what is the next step? You need a professional on your side. You need someone like a nonprofit credit counselor, a certified financial planner, and not all of them require that you have assets. Some of them charge by the hour or charge by the plan. Because, for example, you could be making a lot of money and you don't have the money to pay down your bills. This is just an example.
Yes.
And if you put some money in your RSP and found that, you could take the tax deduction to use it to pay down on the debt or something of that sort.
Right.
You might not come to that conclusion on your own without the assistance of a professional. An online calculator is not necessarily going to do that for you. But the big takeaway is if you don't even open the bills, if you don't even know what you owe, if you don't know that you maybe have an employer benefits plan, you're leaving money on the table every single day. Or, this is even worse, you were talking about an emergency account that if 50% of Canadians are $200 away from insolvency, we can guess they don't have one.
Right.
You're supposed to have, experts say, 3 to 6 months. You know, I talk to a lot of these experts that are at the, you know, the advisors that advise the plans and things of that sort at work, and they're telling me that people are taking out of their RSPs in the work plans to pay for day-to-day emergencies. This is what your, you know, this is for retirement.
Your future.
Exactly. So it's not that you're wrong in doing it. It's not that you should feel bad. And that's what I hear all the time, like, oh God, and I'm sure you do too. You're a financial literacy leader in this country too. And it's like, great, the money person's here. We like our shoes. We like what money bought. It's not about that. It's about paying attention and not wasting. You know, if you add up, especially if you're in a lot of debt, and you add up just the servicing of that debt.
Well, that's just it.
Right?
And before we go to break, I just wanted to say, you know, you brought up a very, very important key. $5. $5 is not a lot of money.
Right.
And $5 will not set you back, whether you put it aside a week, a day, you know, $20 a month. That accumulates, and that'll help you get out of a hole a lot faster than just leaving things in the drawer, not looking at them. Kelly and I will be right back after the break to talk about women and finance here on Finance is Personal. Hi, welcome back to Finance is Personal. I'm Liz Naumovski, and today we're discussing money, smart living with Kelley Keehn, financial literacy advocate, award-winning author, and personal finance educator. Kelly, let's talk about keeping up with the Joneses. It comes up in almost every show that I do. FOMO, the fear of missing out. Everyone's going and taking Instagram photos or don't want to be seen in the same dress. Actually, I emceed a gala. And then 3 weeks later wore the same dress and tweeted about the fact that I wore the same dress within 3 weeks. And I don't have a problem with that.
Oh, the horror. How could you, Liz?
I know. It's just who I am. But seriously, there are a lot of people that really care about, you know, the fear of missing out. And oh my gosh, if Kelly has it, I need to have it.
Yeah. There's 3 things I want to unpack there. Number one, there's this financial buffet in life. And you might have chosen kids. You might have chosen, you know, to pursue your PhD. You might choose to, you know, have a rust bucket for a car and travel the world. But that's your choice. You can't eat everything at the buffet. And it's like we want to have everything. You know, the people want to have the kids and have the house paid off and travel the world. It's like you can't have everything. So that's number one. Number two, when, you know, it's only been maybe the last few decades and forevermore that you believe we've been on this planet. If you were poor, you looked poor. If you were rich, everyone knew you were rich. That was just the deal. Now today, you have zero clue. And you have a background in the financial industry, as did I at one point. And I always like to say that only God and your banker actually really knows what you make for a living.
True.
Otherwise, with the advent of credit, you can look like anything, or you could have had an inheritance, or all of the myriad of things that allows you to look wealthy. And then with Instagram, with Facebook, you literally can just walk onto your friend's private jet, take a picture, and everyone thinks that you had it. It's a snapshot of life, but it in fact is a real thing. There is a University of Alberta professor wanted to quantify keeping up to the Joneses, and he found that if your neighbor wins the lottery, for every $1,000 that your neighbor won, your chance of going bankruptcy would increase by 2.14%.
Wow.
Right.
That's insane.
Because, so what does that mean? It means that you would see that, you know, now your neighbor has all these toys and everything else, and you would want to keep up with it, therefore going into debt to get those things. And I'm the first, and I've said it for many, many years, that I spent my 20s doing exactly that, keeping up with my very wealthy clients. I did not make enough to do that. I grew up with not a lot, so I did have that poor kid syndrome, right? Where like, I am not going to look poor. And I remember in my mid-20s, maybe late 20s, just looking at my stuff, getting on a calculator and adding up the interest and going, I'm not free as a woman. Because I'm not financially free, because I'm tied to this stuff. And never again will I do that. So I think until a person really gets that lesson, that by all means enjoy your life, whatever it is. You love cars, great. You love vacationing, great. But you can't have it all. And don't compare, because you have no clue who you're comparing. And I know when I was in the industry, how many quote unquote wealthy people were walking into my office one step away from bankruptcy. But they looked fantastic.
You know what? And that's a really interesting point too, because if I'm doing well, I share it with my friends. If you do well, you share it with your friend. But if you went out and bought something, I don't feel that I have to go out and buy the same thing. I don't feel that I have to spend money because you spent money.
Right.
And I get so many people that comment to me and say, well, you make more money than I do. But as you said, nobody knows how much I make. I don't know how much you make. So how can I compare myself to you?
Right. And it's not even the making of the money. I mean, when I, again, was in the industry, a lot of my wealthiest clients were of modest means, right? They kept buying maybe some real estate, or they were teachers that just invested well, or what have you. So even if you don't appear to have that, it's what's behind, you know, you've seen that, we've all seen it on social media, the little iceberg. It's like what's underneath it. And here's words that I heard a lot growing up that no one says anymore. I can't afford it. And it doesn't mean you can't afford it. Like, we're so terrified to tell kids we can't afford it. What I can't afford it means is I'm not going to spend the money on it because I need to put money in the TFSA or the RSP, or I'm fast tracking paying down my mortgage, or whatever that is. But as you know as well, the number one rule in economics is incentives drive the market. We've been in a low interest rate environment. There's no incentive to save. Right?
You know, it's funny that you say, you know, if you can't afford it, you don't buy it. When I was in college, they basically said, you need to go and get yourself a credit card so that you can, you know, belong as an adult and get some sort of a credit history. And at that time, I needed to ask my father to co-sign for me.
Wow.
And he looked at me and he said, no, cash is king. If you can't afford it, don't buy it. And so I've lived my whole life like that.
You're amazing.
So that if I can't afford it, you know, I think about it. Something, you know, I give myself a threshold, whatever it is. If it's $50, $100, whatever my threshold is, if it's within that threshold, I'll go shopping, I'll purchase it. Anything over and above, I'm very strategic that way. And I think a lot of people are not strategic anymore.
They're not strategic anymore. And also, you're depriving yourself of savoring the purchase, right? When we're so instantaneous, and I know we're going to talk a little bit about the behavioral side, but there's more and more studies as well saying you're going to enjoy the experience so much more than the stuff. You're also, and I have to do this because I, unlike you could teach me a lot, I know I'm a spender. So I have to do things like make sure I'm saving a certain amount every month. So there just isn't that much left over for me to spend, right? Taking care of it. But there's a lot of research coming out that when you are buying things, for example, let's say you were refurnishing your home, don't buy everything at once.
Right.
Because in 3 to 6 months, you don't care about the stuff anymore. You don't care about the car anymore. But if you incrementally buy stuff and stretch it out, and really enjoy it and buy things you love,
Right.
not just because they're on sale,
Yep.
right? Things that you feel good in or that you love around your home. Like we've just got away from, maybe because things are cheap now, right? You can buy everything, it's cheap. We just buy so much, we consume,
But that's why we're in debt.
and people are less happy than ever,
Yeah.
right? Nobody passes any heirlooms off anymore. It's that very disposable. So it's, there's the slow food movement. I think we need the slow money movement, right? To just slow down.
I think that's brilliant.
Yeah.
So let's talk about women in finance.
Sure.
And how women are growing with some financial power now, because a lot of us are making more money.
Mm-hmm.
A lot of women are making more money than their spouses.
Yes.
And a lot of them are going out and buying homes on their own.
Absolutely. I mean, times have changed. I did not grow up in a time, thank God that so many strong women before me have changed so much that I can own property. There's still a lot of women in a lot of countries that cannot.
True.
You and I are both financial literacy advocates. That would not have existed, a few decades ago,
Yeah.
5 decades ago, when we first started in the industry. How many, females did we see?
Not
Very
that many.
few.
Not that many.
And it is rapidly changing. How many women are, like you said, breadwinners, and how much wealth is going to be in their hands and is in their hands now. So I find there's kind of 2 camps of women. There's the camps that are going to the seminars, subscribing to the magazines, watching programs like yours. And then there's the ones that are still resigning themselves to finding, a shining knight, abdicating it to parents or spouses or what have you. So there's still a lot of work that can be done, because women are living longer.
We are.
Out of the workforce if they choose to have kids. Definitely the ones that are the primary caregivers, if their spouse suffers something, their parents, their spouse's parents, it really falls on the women. So it behooves all women, even if you are, you're a homemaker or what have you, I really don't believe women are free until they're financially free, as I said before. And that doesn't mean you have to be the breadwinner, but you need to know about your financial situation in the event of a death, a divorce, something of that sort.
Financial freedom. Good time to take a break. We'll be right back after this break to find out what resources Canadians can use to take control of their money here on Finances Personal. Welcome back to Finances Personal. I'm Liz Naumovski, and I'm excited to have Kelley Keehn, financial literacy advocate, award-winning author, and personal finance educator. And I'm still so excited that you're here.
I'm so excited to be here. It's long overdue.
I know.
Really long overdue.
So you know what? Let's talk about couples.
Yes.
Couples and money.
Yeah.
It's always been taboo. People don't like to discuss it. They're afraid to talk about finance because maybe he has more, she has more, they have more, whatever it is. I mean, let's bring this to the table. Couples should discuss finance and money.
100%. I mean, we're messed up about money as individuals. And you take, what was your cultural upbringing? Was it okay to talk about money? Wasn't it? Then you bring another person to the table and it exacerbates everything. And
Different family.
100%. Yeah. And I mean, the thing too, and it is complex, right? 3rd and 4th marriages and children and all of that. There was a study recently in the US, and I can't remember the exact number, but it was a ridiculously high number of spouses, 10 years plus married, didn't know what the other spouse earned.
Oh.
That is how significant it is for a lot of people. They don't know what the credit rating is of the other individual. A lot of times they actually, when the veil is revealed, comes off, it's usually when they're sitting trying to get a home or a car loan or something of that sort. And it's like, what? You have how much in credit card debt?
Well, and that's just it. Because if you are a couple and you're married, you both share that debt.
Right. Yes and no, right? Depends on the province, depends how the debt was brought in and all of that. If it's a small business or not, was it? So, I mean, there's a lot of questions here. And don't, some of your viewers might already be cringing. Like, you do need to have the conversation. Oh my goodness.
Sit down and talk, open up a bottle of wine.
Exactly, but don't feel that you're gonna solve it overnight. Like, enter it in gently. One of my books, I actually have a 6-step conversation to have with your spouse.
Okay.
How to get on the same page about your goals and your wants and your needs. I mean, that's really important too. Some people say have the money talk, but do you even know what your spouse wants to do? Maybe your spouse wants to have a child and you want to go back for your PhD. There's going to be a big disconnect with the finances there.
I was talking to Cindy Crean at CIBC on one of the other shows, and she was talking about couples that are going in to talk to their financial planner. about retirement.
Right.
And they're completely on opposite ends of the spectrum. You know, she's expecting him to work another 5 years. He's decided he wants to retire,
Right.
but they haven't even talked to each other.
Yeah, absolutely.
And it's, you know, how is it that you can live with somebody and share a home with them and not even know what the goals are or what your future is?
I think this is why it's so important as well, again, to at some point see someone like a certified financial planner, because you might not be equipped to even speak the words to try to extract those goals, to have that conversation. Why would you?
Yeah.
But it's so essential if you're going to get where you want to go, because of course you're going to wake up one day and go, this isn't what we wanted.
Right.
Yeah.
So what are the resources that Canadians can use to help, you know, help get them control of their money?
There's so many. And when we say money, it's protecting yourself against identity theft and fraud and investing and just knowing the basics. All of the securities commissions across Canada have done a marvelous job. The Ontario Securities Commission has GetSmarterAboutMoney.ca. The Manitoba Securities Commission, I can't remember their website, but it's fantastic. They just came out, same with the Alberta. The Financial Planning Standards Council has financialplanningforcanadians.ca. Loads of articles, videos, and also tools. They have a tool as well to find a planner in your area. Credit Canada has some fantastic calculators as well. I know Lori Campbell is a good friend of yours. Really great debt repayment calculators. And also, if you Google the Financial Consumer Agency of Canada, yes, it's a mouthful, but I promise you it's worth it, because they have this incredible database. They've worked so hard over the years that there's a little self-assessment quiz on there, and of the thousands of resources across Canada, they'll narrow it down for the information based on what you said in your self-assessment. You're looking to pay down a car, get a car, or you're looking to protect yourself from identity theft, whatever it is. They'll narrow it down. So Google that, Financial Consumer Agency of Canada. So many hardworking organizations wanting you to pay attention to your money. It's all free.
It's
you
free.
just need to go online. If you don't have a computer or smartphone, I don't know who doesn't these days, but you can go to a library. Like there's just so much that people want you to feel better about your money.
Okay, so I know that this is something near and dear to you, behavioral economics.
Yes.
And money is not rational.
No.
So let's talk about this.
Why are we so messed up about money?
I don't know.
And that's the thing. No, there's a number of things going against us, and the biggest one is this brain in our head.
The negativity.
Yeah, the negativity, but also we're hardwired for instant gratification. We're hardwired to have it now, and there's now, because we have what's called fMRI scanners that can go in and see our brain like never before. So if you think of yourself, let's say this part of your brain lights up, and if you think of a stranger, let's say this part of your brain lights up, okay? If you think of yourself in 20 years, the stranger part lights up. Think about that. Why would you want to save for a stranger? Why would you want to give up your coffee today to save up for what you feel is a stranger, because you have not connected with your future you?
Yeah.
You've not sat down to say, what age, Liz, are you going to be in 10 or 20 years? What are your financial needs going to be? If people just spent 5 minutes doing that, drew a little picture of themselves, and really connected with that person. Michael Lee Chin calls it like having an obligation, like you owe that person that money. But if you've never connected with them, and I mean, I'm just summarizing, the world of behavioral economics is growing every single day, but it's fascinating.
It really is. And the thing is, I think a lot of people don't connect with themselves now.
Right.
So if you don't connect with yourself right now,
Absolutely.
you have no idea what your future is going to be like.
Yeah, and why would you want to do that to yourself? Like, is it more important that you get another like on Instagram because, like you said, you had a new dress? Who cares?
Yeah.
Like, somewhere along the line, we started to care a little too much, and we put other people's opinions over our own, and over our own ability to sleep at night, and not worry about our finances and enjoy life. So it's slowing down. It's like figuring out your goals, figuring out your spouse's goals and your family's, tracking your spending, and opening your bills and looking at what you've got.
So let's look at emotional baggage and money, because that is a huge factor with a lot of people, what money was like when they were children or watching their parents or whomever.
I've written 2 books on it, and I could write 10 more, and I probably will. And there's some great money psychologists out now, too, that are writing books on it, and I encourage your viewers to really dig into it, because it does not matter if you grew up rich or poor. It's your interpretation of those lessons, and what did you take with you? And we all took good things and not so great things with us.
Right.
So how is that serving you, or could that be examined? Do you need to talk to a pro? Do you need to talk to your spouse? Back to the behavioral side, I mean, one of the most important things is automation. Like I was telling you, I know that my emotional baggage was being raised with not enough and wanting a lot of stuff. So having that automation, setting it and forgetting it. Yeah.
And then one last thing, I mean, budgeting. Everyone talks about budgeting, but no one talks about budgeting for the wealthy.
Right.
I think they need budgets as well, don't they?
Absolutely. Now, I have two minds about that because I don't believe in traditional budgets. I think budgets are like diets. They don't work.
Right.
They just don't, because people don't want to stick to them. It's too rigid. For the people that they work for, they've got their Excel spreadsheet. Right. They're doing just fine. But for a lot of people that budgets don't work for, I think it's the tracking. And absolutely, I've done a lot of consulting for high net worth, do workshops for those individuals. Yeah. And it doesn't matter if you're earning $30,000 or $320,000 or $3 million. If you're not saving at any level, you're not saving. So my husband and I, twice a year for 30 days, we do what's called my anti-budget, my 30-day anti-budget. You're just tracking your spending, which if you do all of your spending on one debit and credit card, your bank will do a lot of that for you. Right. But you need to go further. You need to dig in, like, are you leaving benefits on the table with your employer pension plan, for example? Has your car and house insurance just gone out of control, and maybe you should be shopping that around? Like, really digging into your life just for 30 days, twice a year, and tracking it just like you would your calories going into your body. It's surprising what you find.
That's awesome. Thank you so much, Kelly.
Thanks, Liz.
Women are growing with their financial power, and some are making more than their partners. Ladies, take advantage of this power and save, invest, and ask questions. Take responsibility for your future. There are so many experts out there that are willing to help. I often say that I will never fail at anything, not because I'm brilliant, but because I surround myself with brilliant women who are always there when I have a question and I don't know. I'd like to thank Kelley Keehn, one of my brilliant friends, for joining me today, and you, our viewers, for watching. I'm Liz Naumovski. Bye for now.